Hi, everyone. Welcome to the Private Property Farming Podcast. This is the second episode of the podcast, and thank you, everyone, for joining. Today, I'm joined by a very special guest. His name is Sarel, Chief Curve Bender of the Grovation Group. A farmer as well, even though he's a professional in the investment and finance or professional space. But yeah, I'm happy to have Sarel on to today's show to talk about the topic of funding/financing, how to finance your farm. Thank you for joining us, Sarel. How are you doing?
Hi, Mbali. Thank you for the opportunity. I'm quite well.
Great, thanks. Thank you for allowing the time to have a conversation with us in your very, very busy diary. But I really had to bring you onto the Private Property Podcast simply because this is like the number one question that is asked by aspirant farmers or individuals that want to go into farming or farmers in general, in terms of how do I start a farm from a financing aspect? How do I raise funds? Which institutions should I go to seek finance or financial investment for my farm? So I think you're the perfect person to be having this conversation with. But just tell us a bit about Grovation Group. What does the organization do?
Mbali, thanks. Yeah, so Grovation is built on a very unique philosophy, but a very simple philosophy. We believe that business is the only sustainable tool that we have to solve Africa and actually the world's problems, because the moment that you solve a problem at a profit, you create a self-funded solution. So we grow businesses. As Grovation, we grow businesses. We help them by helping their management make informed decisions, coming up with proper strategies, and then helping them to implement those strategies. We'll also connect them to the right partners and suppliers and funders. And then we also run our own Section 12J investment fund with a specific focus on the agri and food sector. And then we also have a little bit of a focus on the conservation side. So we have a My Rhinos fund and trying to also help the rhinos. But very much focus on the agri and food sector and helping businesses in the value chain to actually grow and scale their business across Africa and the world.
Yeah, so I'm glad you mentioned that a part of Grovation Group is an investment fund focused on the agri sector. And based on your knowledge and expertise, what is your view with regards to access to finance, which is one of the biggest obstacles that hinder farmers or aspirant farmers in growing their business in agriculture?
Mbali, I think one of the biggest challenges that we see is that there's a lot of funding available, but it's very difficult to access. And I think the default financing model or financing route that people take is to go to the retail banks. And unfortunately, the majority of retail banks are really having a difficult time to understand the risk associated with small scale farming. I mean, they're struggling to finance large farming corporations, and they're even having a more difficult time trying to fund the small scale farmers. And it is because they don't understand the seasonal risk, or with the uncertainty around property ownership. They are really, really worried about how do they secure their loans. But I think the good news is that there's a lot of alternative ways of financing one's farming operation. You just have to look at it from a little bit of a different perspective. And I think you and I have had many of those conversations where we talk about alternative financing. There's a lot of alternative financing available, but it doesn't come normally in the form of financing, or it's not called financing, and therefore people potentially miss out on those opportunities.
So if it's not called financing, what are some of these opportunities that you're talking about? And if you're saying that there's a lot of money sitting out there, but it's just not really coming forth to the farmers, how else can we access it,
Okay, so let me start with the last part first. I think there's a lot of money out there, but even in our own fund, we have a very specific mandate. So we get a lot of people that come to us and ask, can we invest in their businesses? But they don't always fall within our mandate. And I think that's probably one of the biggest challenges that we see in Africa, is that there's a lot of various funding providers out there, and the average entrepreneur or startup farmer don't really know about all of the various mandates. So they start applying to everybody that say they're offering funding, and then they end up being rejected by quite a number of them because they don't fit their mandate, which means that they end up giving up instead of rather investing more time into whose mandate do their business fit, and then going after those investors or financing institutions that actually have a mandate to invest in their type of operation. So that's the last part. The first part is, so what is it called? What is the alternative financing models out there? And one of my favorite ones is renting. When you rent something from somebody else, you are just financing it in a different way. You're not financing it through your balance sheet, you're actually financing it through your income statement. The nice thing about renting assets or even land is that it actually doesn't show up on your balance sheet. So especially where you finance non-income generating assets. So we have a view where we say any growing organization should seriously consider not financing or owning their non-income generating assets, and rather renting those, because it does not show up on the balance sheet, which means it's off balance sheet financing in a legal way, which means that it also improves the balance sheet's financial gearing, making it more attractive for those financing institutions that really wants to invest in that business. And a good example is, so if you finance a tractor, for instance, the majority of farmers will go and say, okay, what is the longest period that I can finance this over? And let's say the bank say 6 years. Then they take out the loan on 6 years. But when they want to deduct or depreciate that asset, they want to get the best benefit for from a tax point of view, then they normally write it off over 3 or 4 years. So they end up with a bit of a liability deficit on the balance sheet, where you still showing a loan, but the asset has been depreciated. And in most cases, that becomes very difficult for banks to evaluate, and then they end up either giving high interest rates or not financing that institution at the end of the day. So by simply renting the tractor or renting any of the non-income generating assets, you actually don't have that deficit building up on your balance sheet.
Okay, so what I'm hearing you say is, instead of, with all these assets that you're going to buy for your farm, anything that won't generate income, so a tractor is an implement of some sort. It helps you plow the land, weed, or plant, you know. Similarly, maybe let's look at a pack house. A pack house does not generate income. It's really put onto a farm for post-harvest perspectives. Unless, and again, I think the pack house could be used for something else as well, where you, instead of using the pack house for storing and or keeping crops post-harvest in the pack house or in the refrigerator, in the cold room, you could use that pack house as maybe buying additional crops outside of your farm, converting it into a value-added product after processing, and then, you know, using it for something else, or renting out the pack house for a different space to another processor. But let's talk about, you mentioned the tractor, tunnels, for example. Tunnels doesn't generate income, right? It's a infrastructure that needs to be put in place in a farm to grow crops. So what I'm hearing you say is that with this infrastructure that you're going to put onto a farm, that you should look at, instead of buying it, rent that asset, because it doesn't show on the balance sheet.
Yes, especially when you're in your growth phase. I think that's important. If you stop growing and you cash flush, then it doesn't make sense to go and rent it anymore. But if you're still in that growth phase where you are strapped on cash, and you need cash to actually go and buy seed and fertilizer, the things that actually makes you money in the long run, or even in the season, those are the things that you actually need to spend your money and finances money on. And then the rest of it, as far as possible, try and rent it. I think one of the things that we see a lot with startup farmers, and I mean, is that we overinvest in the farming operations because we want that fancy tractor, we want that big tunnel, we want that house or pack house, or all of those things. And I think the important thing is to really look at what is income generating, making sure that for the first few years you really invest as much as possible in the income generating capability of that operation. And then as you generate enough money so that you have surplus, then you start spending it on the nice to have things, or the things that don't necessarily directly generate income.
It's tricky, Sarel, because I'm a vegetable farmer, and some of these infrastructures come standard, especially if you're going to supply to additional markets, you know. And the reason why, as a farmer, you sort of have to have this infrastructure is because of what the market dictates or requires, you know. There's all this policy around food safety, and how your food is produced on the farm, and post-harvest, how it's handled. So things like pack houses, cold rooms come standard. Things like tunnels, or having to invest in shade nets come standard, because no client today wants to hear, oh, sorry, Sarel, I can't bring my green peppers today because we were affected by hail and therefore we have no stock. You know what I mean? That sets a bad precedent to the buyers, even though they know that, you know, we're farmers, we're working against Mother Nature. But then in the next season, what you will typically do as a farmer is go seek to raise finance to build that infrastructure, so that the next coming season, when the hailstorm comes, your crop is protected. So typically, you know, if a farmer has had this experience and then they go and look at a new farm, those type of infrastructure would come firsthand to be like, sure, I know I farmed in the previous seasons and I've been affected by hail. So therefore, on this farm, I want to put up some shade nets. On this farm, I want to put up some pack house because my client, retail X or client X, requires me to have a proper pack house, a proper storage facility where I can keep my crops, not pack my crops underneath a tree. So it becomes difficult. You're coming from a financial perspective to say, you know, there are ways to start farming, but instead of putting money on high capital infrastructure, try find shortcuts to it. But then again, it's a catch-22, because your clients, when they come on board or come to your farm, they want to see infrastructure. So how do we balance that out?
I think, again, back to the whole concept of really understanding which of your assets are income generating and which are not. Because so we are in the our family is in the meat production, the red meat production. So we farm with sheep, and every time we rent a farm instead of buying a farm, what I've seen over the years is that we actually change the way that we invest in infrastructure on that farm as well. So let's take a simple watering point where we provide water to the livestock. When we own a farm, we would normally go and put up a proper windmill. We will go and build a dam out of bricks and cement. That setup normally costs you around 150 to 200,000 Rand per windmill dam combination. The moment that we rent a farm, we actually put in a solar pump and 1 or 2 or 3 plastic tanks. So suddenly you get down to a 20,000 Rand investment that is movable. So the moment that we stop renting that piece of land, we can pick it up and we can move it to the next piece of land. And all of those things, because it's not income generating, and renting a farm or working on a rental farm or rental property, you actually end up not putting too much sentiment to it, which changes the whole way that people invest. And I think that's one of the big benefits that I see in just not thinking about owning everything, but rather trying to figure out how to control it. Because you don't have to own it to control it, but you have to control it to benefit from it. And if you can change your mindset away from an ownership mindset back to a controlling mindset, to say, I need to control that tractor, I need to control that shade net, or I need to control that pack house. How do I do that? I mean, then suddenly you realize, but you actually don't even have to erect a pack house on your property. You can maybe contract with somebody else who already have done it, and actually work with them. Now, sometimes it's too far away, and you sometimes just have to do certain things because there's no alternative to it. But if you go through your whole list of things that you really have to own to be able to control it, I bet there will be very few on that list that you really have to own in order to benefit from controlling it. And I think that's the one thing that I think also is very deeply embedded into the agricultural history of South Africa. It's all about owning the land and owning everything. And I think we're in for a new era where we need to become commercial operators on farms rather than traditional farmers. And we actually need to start thinking like businessmen, to say, but I don't have to own the office building to be able to run my business from that office building. I can rent it. I don't have to own the vehicles that my sales team are driving around in. I can rent it from a fleet management company. I don't have to own the laptops that my people work on. I can actually simply rent it. And if you start looking at it that way, I mean, the rest of the industries have been doing it for many years, but agri is lagging a little bit behind in that mindset. And I think it's actually forcing a lot of skilled agrineers to not engage in agricultural, especially on the primary side, because it's too difficult to fund. But my advice would be, start small, try and really figure out exactly what you need to own to benefit from it and what you just need to control, and figure out how to control it then. I think I've heard of so many farmers that figured that thing out, started off with almost nothing that they owned, and within a decade, they owned a lot of things because they were able to actually generate the funds, buy the stuff without paying interest to a financing house. Now, with that, I don't say don't go and get financing. I'm just saying fit for purpose financing is quite important, to say, find the right people that have the right mandate, that understands your business. Because if somebody don't understand your business, they're going to be breathing down your neck at the most difficult times in your business. So when there's drought or when there was hail, that's when they're going to get nervous, because they don't understand how this works, and they're going to really put some pressure on you. And as a farmer, we all know that that's the moment that you don't need any additional stress. You're already stressed because whatever Mother Nature throws at you just happened, and you actually have to deal with it. But then you don't need your financing partner to also be one of the challenges. You actually need them to be one of the partners that actually helps you through that crisis.
Wow, thank you so much for that wisdom, because what I'm hearing you say is that it's the basic principles of business. Start small, start lean, and scale from there on. And then what you're also saying is that, because my mind always runs quite ahead of me. What I'm also hearing you saying is that now this is an opportunity within the agricultural space for businesses, especially those that suppliers who offer certain infrastructure, maybe tunnels, nets, tractors, irrigation. Instead of just selling those assets, they should look at different ways to make money by maybe renting it to a farmer. So that is an opportunity on its own, and it could happen for a season, etc. I'm just thinking, as a vegetable farmer, if I want to start producing peppers, pepper is a summer crop, and so instead of me being a farmer who wants to buy that irrigation, maybe I could look at renting it for that specific season, and then I'm out. I've made my money, and it all goes back to the strategy of your business in the first place. But I just want to talk about, from an investment point of view, Sarel, you mentioned that investors have specific mandate. There's a lot of money out there. However, the entrepreneur and the investor are not meeting together, simply because the entrepreneur's needs are very different to an investor's needs / mandate. Tell me, why do you think that a lot of investors tend to run away from investing within the primary agricultural space? Because today, everybody's talking about agro-processing, value add, granted, but none of those industries as well would exist without the primary function. We still fundamentally need primary agricultural production. So why do you think, from an investment point of view, whether it's private equity, whether it's VC funding or financing, why aren't there a lot of players within that primary agricultural space?
So I think one of the big challenges that the investment side is facing is that if there's no asset behind the investment and you're just investing in the operations, what you're actually doing is you're investing in the individual. So if I invest in your farming operations, I actually don't invest in the nets or the land. I actually invest in your ability to produce and to run a business. And I think given that for so many years, farmers were almost not running their farms like businesses. I mean, yes, there is some big farms, your mega farmers, they run it like a business. And that's why, interesting enough, I think around about 80% of our mega farmers are first or second generation farmers. They're not third and fifth and 10th generation farmers. They're new to the farming scene, but they actually started it and run it like a business. We have a client, he's quite a large table grape and nut farmer in the Northern Cape. And I mean, he's a first generation farmer, but he actually farms something like 170 hectares of grapes and 200 hectares of nuts as a single individual farmer. I mean, that's a sizable farm and sizable farming operations to actually run. And if you look at what he did, he runs it like a business. He doesn't even live on his farm because he says a house on the farm has no value. So he bought himself a house in town and he actually runs his farm as a business. So that's a very good example of almost like what should happen. But I think we're not seeing enough of that, which makes it very difficult to actually just bet on the individual that actually runs the operation. And I think that's why it's really difficult. The financing institutions haven't figured out yet how to invest in something if it's not asset backed. I think the interesting thing is if you go to the technology space and you look at all of the hustle and bustle around venture capital, there's a lot that we can learn from the way that those guys approach investments and bring that to the farming side. But I think it's going to take some time. I believe this decade is going to shift farming significantly in Africa. And we will see some of these things coming through. And the more difficult it becomes to have an asset behind it, the easier it will be for financing institutions to figure out something else to bet on or to base their risk analysis on. Because currently they look at the asset behind it and they deem and they're trying to determine, is it worth investing? But the moment that you remove the asset, it becomes a different story.
Okay, so for someone watching this live or listening and maybe hasn't posed a question, is it they want to venture into agriculture, whichever commodity it is, whether it's grain crops, livestock, or horticulture, and they've got a bit of money in to invest in, but you know, when they look at the things that they require on their farm, they are pretty much short for cash. So what advice would you give to someone who wants to start farming today? How can they raise money without approaching traditional banks? So what are some of the ways and interventions that you think a farmer today could raise money for their business?
So I would say the first and the easiest one is actually family and friends. They tend to be much more lenient in the tough times than the banks. Not all of them, but in general, it makes sense to approach family and friends, as with any other business. But sometimes the investment, the upfront investment, is too big, and then that's where you then have to look at alternative financing. Instead of building that first farm that you own, go and rent a farm and actually generate a track record and some income with which you can buy the farm that you ultimately want to develop. So my advice would be dream big, start small, and start with something that generates cash quickly. So a good example would be, so if you want to farm with cattle, for instance. So cattle is a slower turnaround than, for instance, sheep. So instead of starting with cattle, start with sheep, because you can a ewe can lamb 3 times in 2 years if you manage it correctly, where you probably will only get 2 calves in 2 years cycle from cattle. So you actually, it's a faster turnaround. The same with, if you want to farm with fruit trees, maybe start with cash crops, depending on your availability of water. Get that cash flow going. Cash flow remains king irrespective of the industry that you're in. And if you can prove that you have the ability to generate cash, financing institutions will also look at you from a more serious point of view and say, okay, you've proven yourself, there's a bit of a track record, and they know that you will be able to generate the cash to pay back that loan or investment that they've made. I think the challenge is that, again, we all have big visions, and we want to start with step 3, start with step 1, and work your way up to step 3. It's going to take longer, but it's going to also, you're going to learn a lot of lessons through that first few steps, through that first initial few months or even years, building it up. I mean, the interesting thing is, if you look at agri in general, is one of the industries that is extremely capital hungry, and because of it has so many assets as part of the operational model: tractors, buckies, pack houses, land. And if you then put in any of your crops that's not like on a quick turnaround, like if you start planting trees or vineyards, I mean, those are things that for the first year or 3, you actually have no income from it. If you plant, for instance, if you plant a pear orchard, you're only going to get money in year 4. If you plant a nut orchard like pecan nuts or something, you're probably only going to get money in year 8 or 10. And starting there, I think you're going to have a lot of sleepless nights, and you're going to have a very few investors looking at you. But if you have a track record and you can mix and match things, you're gonna attract the right financing partners much easier. But my advice is try and find alternative ways of financing that. I think people will be surprised at what you can rent these days, like nets that you put over your citrus or your vineyards. You can rent those. Tractors, you can rent those. Like even sheep you can rent. And I think that's one of the things that we are focusing on heavily in our fund, is to actually enable the providers, the suppliers of these assets, to actually generate another income stream in their business, which is renting out those assets, because ultimately they also then need to finance it, and we're there for them.
Wow, I never heard of that. Renting a sheep.
Yes, for
like
only 25 Rand a month. The going rate is around 25 to 30 Rand a month currently. And you can imagine, I mean, that costs you 300 to 360 Rand a year to rent a ewe. And if you manage a ewe properly, she can produce up to 2 lambs per year for you. So you have 4 lambs. Currently, your going rate is around 1,500 Rand, between, say, let's say 1,300 to 1,500 Rand a lamb. So you have 600 Rand for the 2-year period, and you have about almost 6,000 Rand income for that 2-year period. So that's a good way of financing livestock, and it's a big win for everybody. So yeah.
Wow, that's an interesting concept, and I'm sure people would be like trying to get your contacts with regards to that specific model, because it's the first time I'm hearing of it. I am thinking of another business in mind, but yeah, I think from a sheep perspective, it's my first time hearing about it. So I think to sum up our conversation, Sarel, because you've mentioned such valuable key points, is that for any farm individuals wanting to venture into agriculture, they must firstly dream big, but start small. And what they need to do from that, even from a financing perspective, instead of buying the asset outright, they must look at renting it, and they must think from a lean business model strategy in terms of what are the best ways that I can maximize this particular land or this commodity that I want to farm, and then without having to own it immediately, and really control the costs, because cash flow is king, cash is king. The ability to transform your farm into a liquid entity is really what speaks, and that's how you're going to attract investors, because what you essentially said is that investors not only look at the entrepreneur, they not only back the jockey, but they also back the business. Does it make business sense? And if the business has potential to show revenue at a very quick rate, obviously with very low overheads, not a very big balance sheet, then that's where those are some of the ways to obviously raise finance for your business, over and above maybe approaching friends and family at maybe low interest rates or longer payment terms.
Yes, and I also think that it's very important that people approach their customers. Sometimes customers are very good financing partners in your business, especially if you're selling something that's unique or that has some scarcity around it. They might be even better financing partners than your family.
Awesome. Thank you so much, Sarel, for speaking to us today. I think, yeah, we should have maybe allocated much longer time, but yeah, your insights were quite valuable, and thank you very much. And I will see you soon.
Thanks, Mbali. Thanks for the opportunity, and enjoy your day.
It's a pleasure. Enjoy your day, Sarel. Thank you.